Hello, everyone. Welcome back to the Daily Gold YouTube channel and the Daily Gold podcast. Well, did a video last night about silver, and we all know that silver has huge potential. So let's talk about silver stocks and let's do an interview with one. Today we have with us great guest. He is Darrell Rader, the co-founder and CEO of Minaurum Gold. Their flagship project, the Alamos project, is a silver project. So the name is a bit of a misnomer there. Darrell, thanks so much for coming on. Without wasting time, let's get right to it. First things first, for those who are unfamiliar with Minaurum Gold, give us an introduction and a background of the company.
Yeah, so Minaurum Gold was originally formed as Mag Gold, sort of a sister company to Mag Silver. We had a lot of the same investors and geologists, most notably Dr. Peter McGaw as part of the company. And our plan was to do in the gold space what Mag did in the silver space. So we put together a portfolio of early stage projects in area of good infrastructure, put a team together that's taken mines from exploration through development to production, eventual sale. And then we just started drilling like crazy in the gold space in Mexico. We made a few discoveries. We killed a bunch of projects, sort of refilled the pipeline. And then in 2016, we came across the Alamos Silver project. And that's the project we'll be talking about today. My background just a bit is I was one of the original guys behind Impact Silver when we went into Mexico, put a mine into production there, entered gold drilling, and then I was a founder of Defiance Silver. So I'm a silver bug, been so for about the last 25 years. I've worked in Latin America, and yeah, thanks for having me on, Jordan.
Yeah, well, it's our pleasure. Yeah, let's get to the company and to the project, I should say, the Alamos Silver Project. Tell us how and why this project stands out from all the other silver projects out there. And I ask that because if you listen to pitches that all these junior silver companies give, or even junior gold companies, they probably all mention high grade. Many of the silver ones probably mention Eric Sprott as a big investor. So you hear a lot of these pitches, they all sound the same. So for our listeners, how does Minaurum differentiate itself from the group?
So I think the main areas we differentiate ourselves is from the approach that we pursued once we acquired the project. So once we acquired the project in 2016, we did a lot of legwork, mapping, sampling, just trying to figure out how big this historical district was. What separated us at that point is we decided, okay, we're going to drill it. We started drilling. We made a discovery. We hit 8 meters of 1,900 grams per ton silver. And we said, okay, we're on to a discovery now. We've done this before. So let's step on the permitting gas pedal, which, conventional wisdom is that sort of the horse before the cart. But we know in Mexico that there's, the permitting, every kind of permits, they take a long time to come, whether they're environmental, production, or otherwise. So basically, the last 8 years, we've been exploring the project, but even more so, we've been developing the permitting side of it. And because we've done this before, we know that ultimately, when we want to sell the company, we know the kind of questions that are going to be asked of us from the majors or mid-tier silver players out there. And that is not just, how big's your resource? It's, do you have your permits in place? Do you have community agreements in place? Do you have water tied up? Do you have explosives? So where we're at today is what differentiates us primarily is we're fully permitted for underground mining, meaning we could start mining tomorrow. There is no limitation to the amount of tons that we can mine underground. We have full road construction permits. We can basically build roads to access any part of the project we need to. We've already tied up a good chunk of our future water needs. We are just about halfway through the explosives permitting process. And then on top of that, we have complete infrastructure right on the project. This isn't one of these projects that, has great grades, but is in the middle of nowhere, needs a helicopter to access, or, half a day's drive on a dirt road. We have a paved highway going right through the project. We have a hydro dam, probably, about 20 miles away. We have a town of 80,000 people about 3 miles away from the project. So we have people, we have infrastructure, we have hydropower. Mexico's third largest operating copper mine is our neighbor to the north. So there's a very good workforce, many of which live on our project. And as I said, we also have full 29-year agreements with the local communities covering exploration through exploitation. So we're not just a deposit being drilled off, we're a fully permitted structure so that we don't have to sit here and just drill and sort of cross our fingers and tell the market, well, in 6 months we're going to get our permits, or in 2 years, and now 2 years later you're saying another 2 years out, that's all in place. The key thing for us now is to catch up on the resource side, and of course we'll talk about that a little bit today. But our idea is get an initial resource out end of summer in time for Beaver Creek, and then that'll start giving investors the ability to sort of compare apples to apples, oranges to oranges, and start seeing where we fall in the spectrum of silver explorers versus some of the bigger peers like Vizsla and Go Gold and other companies like that.
Just one quick follow-up on permitting. I guess this ties a little bit into talking about the resource, but do you think right now you are getting a good amount of value for the fact that you're fully permitted, or will you get a lot more value with respect to that when you're able to grow the project and get it to a certain level?
I would say I think we're probably getting a bit of value for having the permits. I can't, say exactly X percentage of our market cap is due to permits because we are pre-resource still. And so when you look at our market cap, we are one of the bigger, smaller players pre-resource, but we are, we're way behind the guys that have resources in the ground that are higher grade, not optionality plays, but the sort of the higher tier silver explorers in Mexico grade wise. So I think what you're going to see is I think we're going to see a re-rating once we get our initial resource out, because now people can compare us and say, okay, and what we're targeting, we'll get into this, but we're sort of targeting something in the 50, 60 million ounce silver equivalent as an initial resource. There's still a bit of drilling to be done before we get to that, but we have plans to do that all by the end of August. That kind of a resource, that's basically the same kind of starting resource that Vizsla put out at Panuco. Silvercrest at Las Chispas started off with a 45 million ounce resource and then grew it. So that's basically our plan, is get that initial resource out and then drill like crazy right into February, March of the following year and get a resource update out, hopefully much closer, if not exceeding that 100 million ounce mark. That's where I think we're going to then start really getting the value of our permits, because it's not our plan to drill this off into hundreds of millions of ounces, at least not right now. Maybe if silver is $50, we have a different discussion, but right now the idea is get over that 100 million ounce mark ASAP and then start moving this thing towards production. Do a PEA, do a pre-fees. One of the things we did not permit at this project was a flotation plant, mill, tailings dam. The reason we did that is because this area has a lot of infrastructure around it. We have a flotation plant at the mine next door that is not running at full capacity. We have a massive flotation plant and mill that is just sitting in what would I call it? Basically at a rehabilitated mine about 15 miles away from us. By massive, I believe it's about a 12,000 ton per day mill. And there are two toll mills within about a 1.5 hour drive of the project. So our attitude was, let's get the operating permits in. We have those. Once we get over 100 million, start doing PEA, pre-fees, and start exploring then the option of maybe tying up a nearby mill and just getting ourselves to become the next logical takeover candidate in the sector. And I think it's kind of universally understood, if you heard some of the interviews from like Michael Stuyven at Pan American and other companies, that everyone is looking for not just a big deposit, but it's on the path to production. Permits are in place. As many, items are de-risked as possible before the big boys are willing to jump in. And that's, of course, what we've seen with everybody from, Gatos to Silvercrest to more recently MAG in Mexico.
Yeah, there's a couple of things I want to follow up. I don't want to go off on a tangent, but because we could talk about size and grade. Let's talk about grade. So I know there's some information on your website. You mentioned your average grades from all the holes that you've drilled. What are the grades looking like? And again, how does this stack up with the rest of the silver companies? Is this really high grade silver, or are you just putting a bunch of metals together where it looks like high grade silver equivalent?
So, what we're targeting internally is sort of a minimum of at least 320, 325 silver equivalent in the maiden resource. And of that, I would say about 2/3 is silver, the rest is base metals. One thing I will highlight is that 325 is an accurate silver equivalent. It's not what a lot of juniors pump. I mean, that's a silver equivalent after recoveries. When you do a maiden resource, when you quote silver equivalents, it has to be post NSR, post smelter returns, like everything. It has to be a realistic number, not just, we have 10 grams of silver, but we're running 200 silver equivalent. It has to actually be a real number. So that's what we're targeting. What we do think moving forward is because we're only taking two areas into our initial resource, and these two targets maybe consist of perhaps 5% of our overall vein structures that we've mapped so far. One of them is high grade silver, being it's every assay in it is virtually over 300 grams. The other one is running a lot closer to 200 grams silver, but has a really strong base metal component to it. Moving forward, like when we go past this maiden to an updated resource where we have a lot more drilling to go, and so you get over that 100 million ounce mark, I believe a lot of those shoots that we're going to be drilling are going to be primary silver shoots. So if anything, I think we'll see the silver grade start to move up over time. And then the other answer to your question is, where does that lie in Mexico? I would say, once you go over 300 silver, you have to remember in Mexico, the average underground mining grade in Mexico right now is about 150 grams silver equivalent. So at 300, you're more than double the average underground mining grade in Mexico. On the investment spectrum, typically, in my experience, anything over 300 sort of gets into that top tier valuation, and you're considered one of the higher grade plays versus, under 100 grams, you're into the optionality plays. So we would definitely, we're focusing on getting more into that, Vizsla, Gold, now they're gone, but Silvercrest, Gatos kind of grades versus the sub 100 where you have Discovery and many others sitting.
Yeah, one thing, the mineralization, is that wide enough? Because we look at a lot of these results from silver oh, this is super high grade, and then it's like over 1 meter, 2 meters, and you think, gee, is there a mine there? So are you seeing enough width in these high grades that you're getting from your drill results?
Yeah, you know what? Give me 1 second. I'm just going to share a screen I have here that kind of shows it a bit clearly on what we're looking at. But this is just a map that's on our newest presentation on our website. But this is one of the main systems we're drilling off called Veta Grande. It's part of the Promontorio target. We're putting Promontorio Europa into our initial resource. The reason I pull this up is it shows you some of the widths here, especially when you look in the core area. These are these 1,000 gram per ton times meter contours that we've shown where you can, see very clearly where the high grade is. But you see some of these widths, 8.6 meters, 8.8, 6.5, 5.3, 18.4. These things are really wide systems traditionally. You do get pinches and swells on these, so it's not like you have an 18-meter wide vein that just treks across countryside. It's going to pinch and swell. But what we're finding is the pinches, which are a meter wide quite often, the nice thing is they're running 500-600 grams. So when you're mining a chute and then you move into a pinch to go on to the next chute, you're probably going to be making money eventually on these things because the grade is high enough in the pinches to make it worthwhile to cover expenses. And then you get into the chutes, and that's where you make your money. Now, the other reason I just shared this screen is because of what I have up here on the top corner. This is what we announced the other day, is that we're starting to get a better understanding of a few of these vein systems, albeit not all of them. But Promontorio is a stacked vein system. Stacked veins are what really added tonnages and also really high grades to Las Chispas and over at Gatos Silver. At Las Chispas, for instance, Babicanora was their big discovery vein. That was a blind vein that virtually everything ran over a kilo on. I'm not saying that's going to happen here. I sure hope it will, but that's the kind of thing you can discover when you have these stacked vein systems. Because if you look at there and you see the width, when you're thinking about mining, you want to go into an area where you sink, you put your portal in, you put your decline in, you cut a vein. Then, 20 meters later, you cut another vein. Then 30 meters later, you cut another vein. It's a way to not only build tonnages, but it increase, the amount of production ability eventually when this thing goes into production substantially. But also it increases the amount of tonnages as you drill off these neighboring vein systems. And this is the main one, but we're ultimately going to put a good chunk of all 4 or 5 of these stacked veins into the initial resource.
Okay, Darrell, just a couple more questions. Now you say you're targeting 50 to 60 million ounces silver equivalent in the resource that's coming over the coming months. Let's take that at its word. Can you go into detail and how you get from that level to 100 million ounces? Because I've seen it, a couple of companies, they say we're targeting X number and X number. maybe there's another slide, but maybe you can take us through so we as investors understand how you can get or how you will get from that level to, the 100 million ounce level.
Sure. Yeah, no, that's good you mentioned it. I do have another slide I'll just flip up quickly. So this is sort of our path to 100 million ounces silver equivalent. There's a lot that has to go right in our drilling, but the nice thing is we don't need to make new discoveries to get to a conceptual target of 100 million based on what we've seen so far. So we have drilled a lot on this project. We're getting close to 60,000 meters of drilling. Historically, there was over 15,000 meters of drilling. If you look at this map here, the big thing to note is Europa here and Promontorio. These are the two targets that are going to the initial resource. We see a lot of resource potential at San Jose, up here, Pulpito and Catera, which have, now that we're doing the modeling, are definitely a series of stacked veins. Minas Nuevas is a target. These are all targets that we've done a fair bit of drilling on, but not a sufficient amount to get to a resource. So if I were to flip up, this is, for instance, one of the biggest historical mines here, 100 million ounce producer. We have one hole in. We now have old workings. We can see how the deposit looks. You can see it here. On surface, these are our assays, a lot of kilo plus assays on surface. This is something we know has a lot of leftover mineralization according to historical records. So that's one target we'll drill. Minas Nuevas, the last hole we drilled here was 9.8 meters of a kilo. We know that this has a historic resource. It's historic, but we need to do a bit more drilling. But the idea is get this into the next resource. The historic resource here is approximately 15 million ounces, grading 300 tons per gram. And then you see, just some of the other targets. This is the stacked vein scenario I talked about at Catera, Pulpito. You can see some of the grades there. Alessandra, San Jose at the bottom. But suffice it to say, there are a lot of targets that we have holes into that we believe will be the next 50, 60 million ounces. It's just a matter of drilling.
This might be an obvious follow-up question or an obvious answer. So where we are here and now, is it different than 2, 3, 5 years ago? Because now you have enough targets where you can really do a big drill program to add to the resource. Whereas before, you would have liked to say, oh yeah, we can drill a lot, but it didn't really make sense because you hadn't back then because you didn't have the number of targets and the high potential targets that you've outlined now.
I would say it's a combination of those as well as permitting. One of the things is when we started this project, we were limited to a certain number of rigs operating. And even back in 2020, we were only allowed to operate 3 rigs at any one time. We are now able to operate an unlimited number of drills at any time. So it was very much just a transition over the years as our permitting matured. We kept getting more allowances to expand programs, to do more work in the area, to do road reconstruction. But when I talk about permitting, this permitting process is extremely expensive. As it took us a lot of years, probably took us a good 6 years to get to where we are today. But that includes everything from, tagging migratory bat species, having biologists from the University of Mexico City out for multiple years, doing air sampling over multiple years, water sampling over multiple years. So there was a lot of things that as we generated these baseline environmental studies, we kept getting more allowances from the mining ministry to do more and more and to cause more and more surface disturbance on the project. But ultimately, our view here is now we have, we're doing that permitting, but while we're doing it, we're generating targets. And now we sort of come to that tipping point where we have a ton of targets. We have over 26 separate veins. We've only drilled about 14 of them. Now we have all of these targets completely permitted for drill pads. Like we don't need any more drill pads to drill all these targets I just showed you on these slides. They're all permitted. And then now we can have an unlimited number of rigs. So it's coming to sort of this fortuitous time where everything's coming together at the same time. And yeah, now the idea is, do a lot of drilling to August, get our maiden resource out. After that, probably spike up to maybe 4 or 5 drills and then just drill the meterage out to get to that 100 million ounce plus mark before we get our next resource out.
I don't know exactly, but what kind of meterage do you need to get to that point? Like another 40,000 or 20,000? What kind of ballpark does your team see?
With a healthy contingency on it, probably in the 35,000 to 40,000 meters of drilling.
And how's the cost of drilling looking right now?
At this exact moment, the drilling cost has gone a bit up. Traditionally, we operated at about 225 US all in per meter. I think now with some cost inflation, because there is cost inflation going up, we're probably looking at something to 250 to 270 US per meter all in. So basically all in being your underlying cost is half that, and then the rest of the cost is, water, geologists, core boxes, everything you need to do to operate the drill program.
So I know that you came into the business on the financial side, the market side. Financing, is there interest from the big bankers? Are they kind of swirling now? They see all these silver takeovers. Maybe you could give us some color on that, what the prospects are for you guys raising the capital that you need to get this project to that level.
Yeah, I'd say that proverbial switch kind of flipped about 3 weeks ago. It went from, going to PDAC in Toronto in March, which is a big mining conference that, what I think 25,000 people went to. We went there, we saw the banks at the receptions, we went to a lot of the bank receptions, and there's always interest when you're higher grade silver and you're showing some size potential. But it was us making the call. Since the last 3 weeks, it's been them calling us. There's a ton of interest. For us, mag was a big thing simply because Peter McGaw is still intimately involved with our company, was the founder of Minaurum. He, of course, is Mr. Mag. He discovered Juanicipio, Cinco de Mayo, all their projects. So that brought some eyeballs. The other thing that's been helping us is, and we'll talk about this a bit more, is we brought some of the personnel on from Silvercrest that worked over at Las Chispas, especially one of their senior resource modelers. And he's been a critical part to us moving now towards this resource, this maiden resource. So, I think as we go on, it's just going to get that much hotter. Like you're not seeing for our stage company, I don't think you're seeing the sort of the big five Canadian banks, the BMOs, the Bank of Montreal's, TDs. They're not coming to pre-resource yet, but a lot of the more name brand investment banks that have been a little shy of pre-resource are starting to come to the table now. So it's interesting to see that. And we're setting up calls with mining analysts every other day, and that's also something that's been relatively quiet since probably 2021. It really went dead there for a 3-year period. The last big rush was 2020 when we had analysts calling, but that it's definitely coming back. But it seems like in a more stable and sort of growth oriented way than one of these crazy spikes like we had in the last 5 years.
Darrell, it all sounds great, but what would you say are your biggest challenges right now? Like what could stand in the way of you not getting to that 100 million ounce level, if anything?
Well, you're always going to have exploration risk. There's only so much you can do to limit your risk. At the end of the day, there's always geology. And so, as a financial guy, I want to hire the best geologists I can in order to eliminate that sort of geological, you know, human risk that's attached to it. But there's always going to be geological risk. The nice thing is we are in a historical cap, so it's not like we're doing this from the get-go from something that's never been done. We see historical mines, we can go underground, see the nature of the mineralization. But geological risk is always a big factor. And then number two, Mexico's gotten a lot better politically, but I still believe there is a discount given to Mexican plays in today's market. I know we have a new president in Mexico, but I think there are still a number of potential acquirers out there that are a bit gun shy of Mexico at the moment. Obviously, that hasn't stopped Gato, Silvercrest, and Mag from getting taken over. But that's when I go to conferences, I'm still asked a lot about the political situation, the Mexican legal situation, mining laws, are changes coming down the pipeline. Those aren't things I was asked about, 10 years ago when I was operating in Mexico.
Before I let you go, two more. Is there anything that we haven't covered that you would like to discuss or mention?
I would say not. I think this has covered pretty well everything. I think what we're going to see, just as a sort of a plan in place for investors of the company, we're going to see a lot of news releases, especially drill results wise, going right into August and late August. Our resource is making a lot of headway. So as we get these numbers in, they're just getting plugged into the resource. So the resource should be ready, and we're getting it done by IMC. You'll see some news on that. We are going to do a lot more metallurgical testing. When you're doing resource work, one of the easiest ways to add ounces is to improve your metallurgical recoveries. And we have done some very early stage met testing, which has been excellent with silver and gold, but it's been a little weak on the zinc and lead and copper side. And that's something we're going to rejig and do some more advanced testing just to get those recoveries up to what our peer groups are seeing. So you're going to see news on that. And then you're also going to see everything from probably right of way purchases, explosives updates, water updates. And there'll be some updates on some of our other projects, some of the things we're working on as far as bringing partners into some of the other projects. But our time and money is focused on getting Alamos to its initial resource here.
And before we close, Darrell, I know that you're a silver bug. You're an investor in this sector. So, I mean, stepping out of your position as CEO there, as a silver investor, can you share any wisdom to the crowd here? There's a lot of silver investors out there. There's lots of companies people can pick and choose from. Any wisdom or guidance or tips that you could share?
I guess there's two things. Number one, silver is all about timing. As a silver bug who's a CEO, I can't just be like, okay, that window's shut, off I go. I need to stick around for my investors. But as an investor, I do like these are the times in the market where I start investing excess capital into silver names. And I think what we're seeing is more of that traditional trickle down effect than we've seen the last few cycles. I started in the industry in '01, and I was pretty blessed because, '01, as your charting has shown, Jordan, '01 is the beginning of virtually a move that went through to 2011 with a hiccup in '08. And what we saw is we saw the traditional trickle down where money went into the miners, then the mid tiers, then the junior producers, then into the juniors. And when I'm looking at a lot of our peers, when I'm looking at the producers, especially in Mexico, a lot of them are flying. There's a number of them that are up, 500-600%. The majors are way up. You can see the money start to trickle down, and it's going to get to our level at some point. And when it gets to our level, and I think it is getting there, that's why the investment banks are getting excited again. That's when you start seeing these massive runs like we saw in, June of 2020, in January of 2016, where silver's, leverage, completely eclipses gold, at least for a good, it could be anywhere from 6 months to a year plus. But I've always found that gold has its move first, then silver has its move, and silver plays catch up, and that's where you get that sort of spring effect where the leverage just goes crazy, and that's where I think we're getting there. I've been buying Minaurum shares in the open market. I can see on my insider filings. I've also been buying other silver names because I think we're getting to that sort of jump board effect where everything just has a very solid run for an extended period of time.
I agree. I mean, we just got out of a secular bear market. I like to say, depending on when you measure it, a year or two ago, it's hard to be bullish right after a secular bear. But again, I completely agree with you. Darrell, thanks so much for taking the time. And last thing, those who would like to get more information on the company, where can they go to find it, and how can they contact you or company representatives?
Best way, just go to our website, which is minaurum.com, minaurum.com.
Darrell, thanks so much for coming on, and I look forward to potentially having you back later this year, and we could see that resource and see how the company's progressing.
Sounds good. Thank you, Jordan.